Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. It is Thursday, and after 3 down days in the markets, finally today the market got itself back on its feet. And where did it happen to do so? Right around the old prior breakout of 1775. I think it hit as low as 1777 yesterday. So I came in today thinking, what should I do? You know, the market just pulled in. Everyone's calling for a big correction, and there are people saying now it's bound to happen. For me, I was like, okay, took some risk off on Monday. Some things tried to break out and they couldn't, and now they look like they're kind of getting set up again. So let's figure it out. Let's just go right to the charts. S&P, first things first. You take a look here, and you will see that obviously here's the trend that started in November. Let's just take a close-up look to what's going on here. So, you know, remember a while back you had that engulfing bar to get basically taken back within a day, and then we digested higher. This was your last spot to put some risk back on, right? After this day, you weren't sure, put some risk on, there you go. Monday, okay, we traded above the prior high, came back below, had 3 little down days. Last night, I was like, everyone, we should be a little light. We're at the 8th day, we're close to the prior breakout. Haven't got paid too much, pressing the 3rd down day, you know, at most times in 2013. Anyway, wound up closing okay, pretty strong, right back up here, right at 1795, and we'll see what happens if all of a sudden we make new highs going into the weekend, or with option expiration, maybe not. But either way, lots to do. Let's go to the banks first. XLF, we talked about this chart, we've talked about the financials since right here. We talked about it all year, but we want to, you know, we want to put it in phases. Well, look at this phase. That was your igniting bar. That was your, you know, your hold in there, your breakout, and now look at you at highs. Within there, I think, you know, in the VTF, I got long in here, sold somewhere into there. But those who still watch the VTF or read the morning call and see our disclosures or whatever, you know that we were in Bank of America and we've been in it since right here, okay? Missed this igniting bar, okay, it happens. But then right in this flag, you could have switched some gears, got back involved, and those trying to trade alongside us were able to see we were in it for this, you know, entire move. Okay, I'm still long Bank of America, just less. Looks really good. Been talking about this stock all year. Put it in the drawer. You could trade it. If you had it in the drawer, congratulations. If you got out of it when it got faulty here or in here, this was your spot to get back in, and now look at it. We'll see what happens tomorrow. I think right now Citigroup looks good. Obviously, it's a laggard type name because it's not at highs yet, but they take turns. You know, you look right here, closed, you know, a little off the highs, but I think at some point it's going to take out this level. You have a nice base here going sideways. You go to the weekly chart, actually looks good also. Weekly charts just coming back up. And look at the size of the space going sideways. People don't even realize that it's split. So this stock is still, you know, cheap. But anyway, with that being said, starting to poke its head out. At some point, I think it takes this out. You know, I think of any banks, probably more shorts in this one than other things. So once they let loose, it can go. Goldman Sachs also looking like it's finally ready to break above this key level. And I know it's been wishy-washy and hard to deal with, but overall, trying to be clean, trying to hold this 165. If it starts getting above this 168, you know, there you go. Those old highs of 170. So we'll see what happens. But ultimately, you know, the name that I've been focusing on most of the year looks good on the way out. Hard to chase it up here, but if you sold the strength, you're probably upset. That's why I'm glad that I've had it on my VTF to help hold everyone's hand, because it's been quite a run since we started talking about this thing. You know, that summer when I was on with Dominic Chu, where we put together the option strategy right here. Oh, and then I remember this trade at 990. That was a juicy one. Anyway, there you are. Lots to be happy with if you're an investor or trader in Bank of America. Trim and trail, you know the deal. As far as some high beta names. So came in today, not knowing how I can get myself back involved in some names that I really like. So I did it slowly. This morning, Apple was weak, and then all of a sudden, Ihorn talked about how he still has his shares. Then I know they want a little less from Samsung, but they still are getting paid, and it shows that Samsung definitely violated something. Anyway, you look at the chart of Apple, and you know, this is the lower pattern that we've been talking about. This is when you had 2 quarters ago, it traded above this little area. I'm just going to fast forward to what it did today. It did a micro red dog reversal. Not a blaring one, not something to, you know, go, you know, tier 7 in, but all of a sudden it came back in, still held support, traded below 514, and I missed that. I missed this 514. I was at the gym, came back right around 518, 519, saw the strength, bought a little bit back, so I'm back in the stock. And now, you know, we'll see what happens here. It's been going sideways for a long period of time. First time it closed on the highs. Hopefully it gets a little follow through tomorrow. Okay, for it to really start getting going, it's going to have to break above this, 528, 529. We all know what happened here. A lot of us were in it here, added, and then got stopped out. So I know it's painful to get back involved, but if it starts to go without you, you'll just realize that all it did is it took a lot more time to consolidate what's been a pretty decent sized move since about 6 months ago. Anyway, another good looking stock, Google. I know that it hurt us a little bit, especially those that held through, because it tried to break out and it failed, wasn't ready in this tight pattern, then came back lower. But all in all, you look at this overall channel, it still held halfway, it still held the 8 day, it was a little stronger earlier on, and it's still knocking on that door. Maybe it needs a catalyst, maybe it needs an upgrade, who knows, but I did get back into some, and I'm going to try and stay with it. I guess if you did get back into it, now you have a calculated stop here at 1,020. And then if it were to break above this, maybe next time people won't trust it, so it'll go. So this looks okay. Amazon also, look at that. That one held the best, and it looks like it's ready to go again, holding above the prior breakout, turned up, closed above yesterday's highs. See what happens here. Netflix, turn around and boom, right back to the highs. If this does take out this, this 350, you'll probably see another squeeze as it negates some of the pressure from that earnings day failure. Looking okay, still grinding higher. Something that doesn't look as good, but who knows? It could always wake up Facebook. Facebook is lethargic. It's been consolidating what's been a really big move ever since earnings. We traded this for, very actively ever since that earnings, and here's when you had the gap up that failed. Here was your earnings volatility, and since then it's been trapped in this downtrend. So it's coming to a head. Maybe we'll see something resolved either tomorrow or maybe Monday or Tuesday, who knows? But the bears are pointing to head and shoulders top. The bulls are pointing to a trend line here that once it trades above, all that is a healthy pullback coming from 25. And if you do that in perspective, it's kind of true. So with that said, what did LinkedIn do today? LinkedIn, not much to say there. What did Twitter do? TWTR. What did it do? It's still trying to build a floor. Trying to build a floor above this recent 40 area. Not really that interesting yet. It's trying to, maybe at some point we'll see if it could get above this. Right now everyone's still downgrading it and says they hate it, but someone's buying it and supporting this level, so we'll see what goes next. The triple, we talked about the 3D printing stocks coming in, on how they got crushed, on how Monday they flashed an outside day. They pulled in for 3 days. Where was their opportunity? I messed up because I looked at VJet and that one didn't have a bounce, but some of the other guys, got an 80-20 trade or a decent trade out of Triple D and SSYS. Triple D, not a crazy trade, but you know what? If you sold it up here into this outside day, sorry, or got short when it broke the prior day low, this was an area that had some support. It didn't actually break below the prior low and come back up, but it was a little negative, went negative to positive, and gave you a decent move. In the VTF, I talked about how it could easily bounce back to 72 to 74, which would be a third of this range, and now who knows? SSYS kind of bounced back better too, where it opened up and it had an inside day. This too is going to need time. And out of the little guys, Sperling was all over this ONVO. I got hurt trying it yesterday, and granted it doesn't look like much, but this was the top where it broke to the downside, and now it looks as if, hold on one second, it's trying to make its way back up. And from where it was at $8 to almost $9.60, that's a nice little trade. Doesn't look like much here, but on the intraday, on the 5-minute and the 15-minute, that there was money there. The only one that didn't really have money, which I guess makes sense because that was the source of the article, was VJet. VJet tried to go positive once or twice, and it just couldn't. It was worth trying. Look, this was on this day was when Triple D flashed a sell signal. This was your out right there. It's been crushed down back to here. So we'll see what happens tomorrow. Maybe it opens lower, goes positive. Try it today. Definitely wasn't an easy trade. That's where I lost some money today. This was when we loved it back here, and then it started going parabolic and you were on your own. Now we're right back into that round trip. So we'll see what happens around there. But again, that article was not very nice on the bullish side. It really hurt them. So we'll see what happens. All I'm going to do now is watch some price action and not do too much here. 32.26, that's today's low. We'll see what happens tomorrow. Here's another level of support coming into there. This stock actually took me off my game, because I thought there would be better opportunity in that, and I missed a nice trade in Google. I missed a trade in Apple, some of the financials I had, but it took me elsewhere. But anyway, we'll see what happens there tomorrow. As far as Zynga, really nice 2-day trade, guys. I know it closed a little bit off the highs, but big deal. Look where it came from. Here's when it started, pushed through earnings, retest. Yesterday, tweeted about it, talked about it. Here is your ad. Now probably needs some time. Overall, still like the pattern. I still think it filled that gap. We talked about that gap coming into 444, and I still think it goes. I think that come first quarter of 2014, you could have a $6 stock, maybe even sometime in December, a $5 stock, but now hopefully you sold some strength, because that's what we do. We use a tier system. Maybe you bought in here, you added, sold some, so if it does pull in a little bit, you're not crying, you're adding for what could be another move, and just don't trade this thing. If you want to hold it, hold it. And if you are holding it, just don't let this be your one position. Hopefully you have some other things that you're going back and forth, and you'll let the market make you some money there. As far as some of the other things, I think someone was looking at Colgate. Looks kind of good. Look at that nice setup in Colgate. So some of these consumer staples came back up. Retail's a little wishy-washy. Someone said, look at JCPenney's. Well, had the earnings, and now it's trickling lower. I think that maybe I'll be interested somewhere into these moving averages around 880. We shall see. I don't think this is over, but I guess you could draw this little ascending channel. So as long as it stays above there, I still think you could look at it from time to time. Gold reversed a little bit. Someone's like, red dog, look at the red dog reversal in gold. It's not getting me excited or long. But look where it came from, so I guess it's a little oversold. All the moving averages are way above it, so it's extended from it. So at that being said, perhaps maybe it tries to bounce back and retest this, but who knows. I still think gold is a short. It's been a short for the majority of 2013. And that's about it. I got to get going. I'm catching a flight, 7 o'clock, going to Las Vegas, Trader Expo. I will be speaking in the Schwab booth 3:15 tomorrow, and then 10:15 on Saturday. Not going to be as involved, obviously, with Twitter or with the site, because I'm going to be on the road and I'm going to be speaking and hopefully meeting a lot of you guys out there. So no 4:45 for me tomorrow. I'll probably get off the plane somewhere around there. But anyway, hopefully you did well. If you switch some gears on Monday, maybe you caught a cute short. I know with the spiders, I was done with my spiders short at like 1, I think, 7. Let's see, because I talked about it this morning. People on the VTF saw. Somewhere around here, just so you know, I think right in the morning I came in short. I didn't have a lot of positions on. I came in short the spiders, and right here when it took out 179.20, I said, you know what? We held the prior pivot. I'm not thinking net short. I'm done with this trade, and that's the spot where you could have gotten out of your hedge and saved yourself some money. I did put a hedge back on at the close because I'm sitting long, 5-6 positions right now, or maybe even more. You can look at my disclosure at the bottom. You'll see. So with that said, I have to have some kind of hedge on just in case. So with that said, quick feet or just go and enjoy yourself, because it seems like these macro trends have been strong. The trends that have been in here all year have been something to use as a roadmap. If you're going to try and be cute and save yourself 20-something handles like we did from Monday till now, okay. If you're going to try and maneuver some of these patterns when the momentum leaves and come back, make sure you do come back, because at some point they could continue. So just know where you want to live. Know your time frame. I think there's still tactical money to be made. You just have to have the right skill set to do so. Don't overtrade, and get into the holidays next week. Thanksgiving's awesome. One of my favorite holidays. I cooked the turkey. If you email me, maybe I'll give you a hint in my secret recipe. But anyway, just tomorrow's Friday. It's been a long week. I wish you well. I'll be on the road, and I'll check in from time to time. Have a good night.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.